Hi, good morning, everyone. Thank you so much for joining today's webinar on the updates for the latest COVID relief package. My name is Rebecca Shi. I'm the Executive Director of the American Business Immigration Coalition. I see that we have 178 small businesses who have already registered and are signed up for this webinar right now. We're just going to give it another minute. I see the numbers are climbing. We are at 217 right now, so we'll just give it another 30 seconds. Thank you so much, everybody, for joining us today. Great. Thank you all so much for joining us this morning. My name is Rebecca Shi. I'm the Executive Director of the American Business Immigration Coalition. I want to welcome our small businesses, entrepreneurs, and our independent contractors for joining us today. We are currently at 272 small businesses have already attending this webinar. Thank you so much. The mission of ABIC is common sense immigration reform to grow the economy and keep families together. Over the last 8 months, in partnership with the Cook County Bureau of Economics Development, Sochi Flores, the director, the Illinois Restaurant Association, Sam Toya, National Partnership for New Americans, we've worked to provide technical assistance for small businesses across suburban Cook, deeply hurting due to the COVID-19 pandemic. I want to thank the leadership of President Preckwinkle, Commissioners Brennan Johnson and Bridget Gaynor, who are with us today, and our entire Cook County for prioritizing small businesses during this very challenging time. We're grateful to have the partnership of Martin Eakes, the CEO of Self-Help Federal Credit Union. Self-Help's brilliant and patient. Tracy Ward is back with us today, leading our PPP Forgiveness webinar. Last night, congressional leaders reached the deal on COVID relief package. Very grateful to have Congresswoman Jan Schakowsky, a champion for working people, immigrants, and small businesses with us today. Congresswoman Schakowsky will shortly provide an update for all of us. I just wanted to highlight 2 key assistance in the package. Number 1 is another round of PPP and small business assistance, and then number 2 is direct checks for families, including families that are mixed status. The COVID relief bill would include $284 billion for PPP, $20 billion for economic injury disaster loan, and $15 billion for live venues, music venues, cultural centers. There's a set aside of $9 billion in emergency funds for CDFIs like Self-Help and MDIs to support lending in low-income and underserved communities. For businesses that are on our webinar who've already received a first round of PPP, you are now eligible for a second round of PPP loans if you can show a 25% revenue loss. And the loans will be capped at $2 million, down from $10 million in the first round of PPP. For the restaurant and hospitality industries, in order to get PPP loans would be based on a 3.5% 3.5 times average monthly payroll compared to a 2.5 times for everyone else. Other specific side-to-side is $35 billion for first-time PPP borrowers, and of that, $15 billion for with 10 or fewer employees. Another key piece of the aid package is a second round of stimulus checks. There are 2 key differences here. There's a $600 per adult and per child, and plus including mixed status families, which are U.S. citizens married to non-citizens and their children. And we really want to thank Congresswoman Jan Schakowsky, who was a champion fighting for this inclusion. We also know for many families and businesses, this is not nearly enough and will not prevent lasting damage. We're committed now, as we were at the start of this pandemic, to continue to work with you, provide technical assistance in partnership with the county and all of our partners so that we can get businesses and families back on their feet. It is now my pleasure to introduce a champion for small businesses, working families, and immigrants across Cook County, Commissioner Brennan Johnson, to share a few words with us. We assisted 72 businesses and independent contractors in Commissioner Johnson's district with PPP loans and average around $32,000. And we're ready and eager to assist them, and many of you, again, for another round with the dollars they're released. So please welcome Commissioner Brendan Johnson.
Thank you. Good morning. Grateful to be here with you all, to be joined by Congresswoman Jan Schakowsky, and of course my colleague, Cook County Commissioner Bridget Gaynor, who's been a tremendous leader and advocate for families across Cook County, and particularly around small businesses. As indicated, Cook County government has been busy working to do our very best to invest and to support as many small businesses as possible, particularly at this very difficult time. As we know, small businesses are an intricate part in the vitality of local economies, and it's especially important because it's the local economy that allows for employment to exist, for the spirit of entrepreneurship to be expanded, and for the overall strength of our communities. And the first thing that I will say is that over the course of this pandemic, there have been several webinars that Cook County government has sponsored, and those webinars are still available for folks to access on our website, so that if people have questions about the process and ways in which Cook County government is specifically helping small businesses, those webinars are quite instructive. But throughout this pandemic, we've had a recovery initiative of resources for residents and small businesses throughout Cook County. And we do know that many of our small businesses, because they're so deeply connected and tied to families, it's important to note that our food security programs and our making sure that there's housing stability assistance programs, mortgage assistance programs, rental assistance programs. We've had cash assistance programs, utility assistance programs that we've made available. But to be very specific about our manufacturing businesses and of course our small businesses, these assistance programs are so critical. And as this next stimulus package comes through, we will continue to make sure that as much as we possibly can, make more resources available so that small businesses can work through this pandemic and this crisis, and they can maintain some level of business and hoping that we get to the other side of this sooner than later. So I won't take up too much more time. I'm grateful for this webinar and all the helpful information that will extend from this, but do know that between myself and Commissioner Gaynor, we are supportive of small businesses, and everything that we can do at the county level to continue to provide assistance for small businesses during this time, we will continue to push and advocate for that. Thank you.
Thank you very much, Commissioner. I just really quickly want to introduce myself. My name is James Daniel. I'm the Director of Suburban Outreach for the Illinois Business Immigration Coalition, and I'll just be moving us through the agenda today. It is now my privilege to turn things over to an IBIC Steering Committee member and the President of the Illinois Restaurant Association, who has been working tirelessly for the restaurant community in Illinois as we brave this unprecedented pandemic. Please welcome Mr. Sam Toya.
Thank you, James. As we all know, right now, the restaurant and hospitality industry is at a make or break point. We are the largest private sector employer in the state and the second largest private sector employer in the country. This isn't a Chicago problem or a Cook County problem or an Illinois problem. It's a nationwide crisis for over 1 million restaurants. There are 2 million people in our industry that are still out of work nationwide, 2 million. Dozens of restaurants are closing every single day. Our latest figures show that over 110,000 restaurants across the country have closed this year. At the onset of the pandemic in the spring, more than half of Illinois food service employees were laid off or furloughed. That was over 300,000. Restaurants have pivoted their business models and gone to incredible lengths to provide safe environments for their teams and their customers. However, the outlook for the next several months is bleak. 91% of Illinois restaurant operators say their total dollar sales volume in October was lower than it was in October of 2019. 58% of Illinois operators say it is unlikely their restaurants will be in business 6 months from now if there's no additional relief package from the federal government. As Rebecca just mentioned, we're getting there. 51% of Illinois operators say they are considering temporarily closing their restaurants until the COVID-19 pandemic passes. 65% of restaurant owners anticipate laying off more team members in the next 3 months. As indoor dining remains shut down in Illinois, there's so much desperation out there and no easy answers to keep your doors open and people employed. The fact is, we can't sustain another prolonged shutdown without more direct federal relief. The IRS is working to achieve a reasonable path forward for indoor dining. We recognize the pandemic is not going away in the near term, and safety measures such as PPE, masks, social distancing, occupancy limits, sanitizing, and more are absolutely essential for the health and safety of our team members and guests. All restaurant owners, operators care about the safety of their team members and guests. As we have been for months, we're asking Congress to take additional actions to support our industry before the end of the year, which looks like we're going to. We're very, very happy to see the latest agreement that will create another round of PPP, stimulus checks for Americans, business meal deductions, and more. We see this as a down payment on relief, as I say, a down payment, and it's absolutely crucial to get this over the finish line, as it looks like we are by the end of the year. What we really need is a relief fund like the $120 billion Restaurant Act. The restaurant food service industry, including restaurants, bar caterers, and everyone in between, are in need of a bailout. Like in the past, the airlines, the banking, and auto industries have received in the past. We also would like to see other measures passed that have been included in the National Restaurant Association Blueprint for Revival, including expanding the employee retention tax credit, improving economic injury disaster loans, providing tax credits for investment in employee and customer wellness, addressing business interruption claims, providing liability protections for employers that are following all public health measures. As I've noted, we just need something to get across the finish line before the end of the year, before a broader package when the new administration comes in that includes dedicated grants for restaurants and the millions of people we employ. On that note, I want to introduce my friend, Congressman Jan Schakowsky. Representative Schakowsky will be entering her 12th term in the U.S. House of Representatives in January, proudly representing the 9th Congressional District of Illinois. She is part of the House Democratic leadership, serving as Senior Chief Deputy Whip, and as a senior member of the powerful Energy and Commerce Committee. Congressman Schakowsky is a leader on health, consumer protection, and environmental issues. She played a leading role in passing the historic Affordable Care Act and championed provisions of the law to require improved review of insurance company premiums, protections for nursing home quality, and initiatives to increase the number of health care providers. Today, the representative serves as chair on the Energy and Commerce Subcommittee on Consumer Protection and Commerce. Her committee work is dedicated to keeping the products we use safe, our privacy safeguarded, and our economy thriving. The Congresswoman understands how important the hospitality industry is to her district, the County of Cook, and the state of Illinois. Now, I'd like to turn it over to Representative Schakowsky. Representative?
Congresswoman, you might be on mute.
There I am. I'm unmuted. I'm sorry. Thank you, Sam. I really appreciate your friendship, and I appreciate that introduction. I wish I had even more good news. But as you said, Sam, what we're looking for right now is a down payment with expectations that when we have a new administration, that we can take more seriously the things that need to be done. As this is the worst time I have ever been in Congress, 325,000 of our friends and families and neighbors have died now in this COVID-19 pandemic. The White House and the Republicans are have basically ignored what's going on and the economic impact that all of you are calling about today. So I just want to thank you for the leadership roles, for the advocacy roles that you played. Whatever we're getting today, you can pat yourselves on the back, and of course always wishing for more, and we need more, but we're where we are today because of you, and I want to thank you so much for that. So you know what we've done before, the trillions of dollars that we passed in the CARE Act, the first and second rounds of the Paycheck Protection Act, and all the thousands and thousands of Illinoisans who have taken advantage of that, as well as the economic injury disaster loan program, which nationwide over 3.6 million businesses have taken advantage of, and here in Illinois over 141,000 businesses took advantage of. But that money has essentially run out. And I want to tell you, one of the difficulties that we've had is dealing with Republican leaders like Mitch McConnell, who don't want to do anything. Imagine a bargaining position when your across-the-table adversary would just as soon say, forget it. We don't want any of this to happen. So it's in the context of that kind of negotiation. I don't quite understand it because I am sure that my colleagues on the Republican side of the aisle are getting the same calls of desperation that we're getting. So as has been pointed out, the New Deal, so let me tell you where we're at. Right now it has not gone to rules yet, meaning that sometime, hopefully later today, it will actually be on the floor. My staff is saying there's no concern that it's not going to happen, but clearly I would feel more comfortable if I had known that it is written and that it is ready for a vote on the floor of the House of Representatives. So I still have some fingers crossed. But the New Deal does include $600 stimulus checks for most Americans who are making $75,000 or under. And that's per person in a household. And as was pointed out, and I want to thank the immigration advocacy community, this will include mixed status families. It was a real fight, and I am just thrilled that is happening, because otherwise, if there were one person in the family that was not fully documented, no one in the family would be able to get anything. It's just absolutely crazy. But so we won on that. You won on that. So we have the $600, and the deal also includes over $250 billion in PPP funding through September of next year, allowing many small businesses to get first or second round of forgiveness for loans for their payroll for their employees, and this fund will include key modifications to the program to ensure that the small businesses and struggling nonprofits are going to be helped, including specific provisions for independent restaurants and live venues, movie theaters, and cultural institutions. The deal includes a significant set-aside for underserved areas and minority businesses. There are dedicated pots of dollars for community development finance institutions, CDFIs, and MDIs, so that we can make sure that we're not just relying on the big banks to be able to fund those programs. Language regarding the PPP tax deductibility has been up in the air, but I heard at the very last minute, I think I was already on the call, finding out that actually it will be tax deductible, which I know is something many of you have been very concerned about. The deal provides additional dollars for economic injury disaster loans, and also creates a new targeted $20 billion EIDF grant program specifically for the businesses that are hardest hit by COVID-19. None of these programs will, I know, are going to make your businesses whole. I want to say that up front because we're doing the best we can. You're doing the best you can to make this happen. At least we're getting some sort of relief here. So my staff is soon.
Congresswoman? I think that her call may have dropped. So.
Okay. Seems like we lost the Congresswoman, and if we get her back, we will jump back to her. But we thank her for her remarks. Really quickly, we heard from Commissioner Brandon Johnson from Cook County earlier, and now I'd like to jump over to Commissioner Bridget Gaynor from Cook County's 10th District to say a few words.
I'm going to keep this really short. I just want to announce that on December 29th at 1:30, we have the head of the Small Business Administration to do a webinar with us. We'll flash up the details and send it out to everyone on this list, but this will be a Q&A session where he will, by that time, be able to dissect the elements of the stimulus package, answer any questions for small business as to who applies, what applies, and how to get any support that's out there. So it's the 29th at 1:30. It will be a webinar for anyone to join with the head of the SBA and other people who can be online to assist small businesses. Thank
you, Commissioner. We appreciate that, and we will be sure to get that information out to everybody that's on this webinar now, as long as you share it with us. So we thank you again.
Can I just ask, am I on? This is Jan Schakowsky. Am I back?
Yes, Congresswoman, you're back.
Oh, okay. I'll be quiet, but go ahead. I'm done. So go ahead.
Did you want to finish your remarks?
No, I mean, I think I really did. I think it's better off if we go to Andrew and any questions that people have. So I'm yielding back. Thank you.
All right. Thank you, Congresswoman. And again, thank you for helping lead the charge for small business relief in Congress. And as you mentioned, the new stimulus will now include U.S. citizens and mixed status family, and a chunk of credit for that goes to you as well. So moving on, we've got our expert presentation from Tracy Ward. Tracy has done a few webinars with us before, and we keep inviting her back because she is an absolute wealth of knowledge when it comes to all things PPP. So without further ado, I'll turn it over to Tracy Ward.
Oh, thank you, James. I appreciate that. And as James said, with self-help, we were able to participate and do about 1,750 PPP loans in the earlier round. We're in the process of working through forgiveness with that group of borrowers. And so really want to highlight some of the things we're seeing about forgiveness to help you as you work through that process. Today we'll really go through the current rules on forgiveness, timing, the current forms, but I'll also highlight what we expect to be included in the bill that everything crossed passes today, because I think it includes some really good changes. So just caveat, until we see the final legislation and it's been voted and passed, we can't assume these things have happened, but we're really hopeful. We think some of these will make a big difference for a lot of small business and nonprofit PPP borrowers. James, if you'll go to the current rules and tips slide. The three things that we really need to remember, the three rules to get forgiveness. are using the PPP funds for eligible purposes, using the PPP funds during your covered period, and maintaining staff and wage levels. There are several exceptions, and so let's jump into the details, and we'll start that on the next slide. The very first rule is using these funds for eligible purposes. Payroll costs, and then there are some eligible non-payroll costs. The big things, key things to remember on payroll costs, and we don't think that this is going to change in the current legislation, at least 60% of your forgiveness request needs to be eligible payroll costs. If you have 941 employees, that is their gross pay. That's eligible. If in addition to their gross pay, you as the employer pay into health and retirement accounts, that's eligible. And then your state and local employee compensation taxes that you pay in addition to their gross pay is eligible. So that's the main thing to remember. Owner employees, your pay is capped. You're not allowed to pay yourself more with your PPP funds than would have been your average pay in 2019. But for other employees, if you choose to or need to pay bonuses or hazard pay, that is allowed. Before we jump to non-payroll costs, it's important to remember as you're working through your forgiveness application, or just a tip for you, if you have eligible payroll costs that cover your full PPP loan amount, you don't need to worry about documenting or calculating the non-payroll costs that would also be eligible. If you cover everything with payroll costs, that's the easiest and cleanest way to apply for forgiveness. But if, like a lot of borrowers, your eligible payroll costs don't cover your full PPP loan amount, then you could use some non-payroll expenses that you've had to make up that, up to 40% of your forgiveness request. Those are interest on mortgages, so whether that's secured debt, whether that's a mortgage on a building for your business or equipment loans of your business, that interest portion is an eligible expense. The rent or lease payments that your business pays, either office rent or maybe equipment leases, those payments are eligible as long as you're not renting, leasing from a related party. Your utilities are eligible, so electricity, gas, internet service. Those are things that if you need it to get up to your full PPP loan amount to get full forgiveness, you can include those costs. We'll flip to the second big rule you need to keep in mind, use of your PPP funds. You need to use them during your covered period. For every PPP borrower, your covered period is 24 weeks, starting the day you got your PPP funds. Couple of optional things to remember. If you were approved before June 5th, you are allowed to choose an 8-week covered period. We're finding for most of our PPP borrowers, the 24 weeks is just more flexible and makes more sense. So very few are choosing 8 weeks, but just know if you were one of those very early loans, that was an option then, and so you still have that option if you want it. There's also an alternative payroll covered period. If your payroll cycle is biweekly or more frequent, then you have the option of aligning your payroll costs with your payroll cycle. Again, with the 24-week period, once Congress passed that in June, that's become less critical. So most businesses are just using the standard covered period, but you should know that you do have a little bit of option there for flexibility. Using your PPP funds, remember that counts if the cost is paid during your covered period as long as it was due, and it counts if the cost is incurred during your covered period. So a couple of examples of this. If you have a covered period that runs from June 1st to November 15th, if you have a May gas bill and your May gas bill is due June 10th. You pay it June 10th. That's during your covered period. Even though you didn't incur that gas bill during your covered period, it was for May, the full gas bill is eligible because it was due during your covered period and you paid it during your covered period. Let's jump to the end of your covered period. Your covered period ends November 15th. Your November utilities bill, its regularly scheduled due date is December 10th. You pay your November gas bill on December 10th, and the portion that was incurred during your covered period, so November 1st through 15th, you can include. Last thing to really remember here is in every case that SBA has given a specific example on so far, prepayments are not forgivable. So assume for this same business using a June 1st through November 15th covered period, you would not be able to include your January gas bill payment because you haven't incurred that yet and it's not due yet. So paying it in advance will not make it eligible for forgiveness. Let's jump to the next slide. The third rule, which is maintaining staff and wage levels. Big, important, great news to remember here is in a more recent change, loans up to $50,000, you are exempt from this rule. So you still have to use at least 60% of your PPP loan for payroll costs, but you are not going to have any penalty in your forgiveness if you've had to reduce your staff or if you've had to pay your staff less per hour. So you are in great shape on this rule. For loans over $50,000, you do need to maintain each employee's wages, so no reduction greater than 25%. There is an exception to that. If you restore their wages by the end of the year, then you would not have a reduction in your forgiveness. You also need to maintain staff hours, so you need to have the same total number of full-time equivalent employees at the end of your covered period as you had prior to COVID. There are multiple exceptions for this, and we'll go through some of those. But the big thing I want to highlight here is these are two separate calculations. An example of that, assume that prior to COVID, you had an employee that you paid $20 an hour, and she worked 40 hours a week. During COVID, during your covered period, you continued to pay this employee $20 an hour, but because of the shutdown, she was only working 20 hours a week, so you cut her time in half. Is that a wage reduction greater than 25%? No. You still pay Carla $20 an hour. You paid $20 an hour pre-COVID. There's no wage reduction. It is an FTE reduction, though. Carla was working 40 hours a week. She was one full-time employee before COVID. Now she's only averaging 20 hours a week, so you've got a 1/2 FTE reduction, and those are things that will reduce your total forgiveness amount. On the next slide, I want to talk about the FTE exceptions. So if you have had to reduce your staff, and again, this only matters if you have a loan larger than $50,000, but if you do and you've had to reduce your staff, there are lots of exceptions now to kind of help prevent that from reducing your forgiveness. You can rehire or refill that position before the end of the year. If you reach out to laid off employees and they refuse to return, that does not count against you. If you try to find a new employee to fill an open position, but you can't find a qualified worker to hire, doesn't count against you. Someone is fired for cause, that's not going to count against you. And there is a broad exception that was added by Congress in June that I think really helps a lot of small businesses and nonprofits that have had to cut staff because of COVID. If you are not able to generate the same level of business activity or revenues now during COVID as you were able to prior to COVID, because you're complying with federal, state, local COVID restrictions or guidance, then as long as you document that, you are not going to face a reduction in your forgiveness because of that. So that's broad, and it applies to overall to your business, your nonprofit, if you've had to cut staff. The next slide, I want to jump to forgiveness timing. We've gotten a lot of questions about when should you apply for forgiveness. They check with your PPP lender. A lot of lenders are rolling this out on different timelines based on the volume they did, and also as they're working with their borrowers to understand when it makes the most sense for borrowers to apply. Big thing to remember, you should apply within 10 months of the end of your covered period. So once you've used your PPP loan funds, within the next 10 months, you should apply with your lender for forgiveness, because if you do that, then your loan remains deferred until SBA processes that forgiveness request. So a lot of you, your loans were entered before Congress passed some improved legislation on this in June. Your PPP note says that your loan is deferred for 6 months, but by law, your loan is deferred until SBA processes your forgiveness, as long as you apply within this 10-month window. Technically, you can apply at any time before your PPP note matures, but if you miss that 10-month window, your lender is going to require you to start making monthly payments. So that's an important time period to keep in mind. Big note here, Congress is considering, and we are very hopeful that sometime today we will see the legislation and that it passes with some changes that really will make this program more flexible for you. So we're really hopeful about those. We have been working with borrowers and really advising our borrowers as we work through forgiveness with them. If they're not currently fully eligible for full forgiveness, we've been advising them to wait, because we did expect Congress to pass some changes to make it more flexible that may allow them to get full forgiveness. I think some of these things we do expect are in the legislation that Congress is hopefully passing today. So we think that's good news. One of those things in particular, borrowers who received a PPP loan and an EIDL advance, the SBA Economic Injury Disaster Loan Advance, it appears, I'm very hopeful that this has been fixed in the legislation that's passing today, that was reducing PPP forgiveness, but we're hopeful that that is not going to happen going forward. And so look forward to seeing the legislation to see if that does in fact get changed. On the next slide, this was really highlighting some additional changes that we think Congress is considering. I think as the Congresswoman pointed out, several of these things are expected to be in today's legislation. So that includes a streamlined forgiveness process for loans up to $150,000, additional uses for PPP funds, so maybe allowing you to purchase masks or protective equipment that you need to reopen safely. Again, eliminating this SBA EIDL advance penalty, likelihood of a second PPP loan so that you can get some additional funding to help with payroll, allowing you to count these costs that you've paid with PPP as expenses on your tax returns so that you're not hit with a really high tax liability this year, and other grant and loan programs to really support communities that were not well served by PPP or that have been particularly hard hit. Remember, your stories are really powerful. You have direct experience for what your business or your nonprofit is seeing right now, and reaching out to your representatives to let them know can really help. While today's legislation, I think, will be really positive and have a great impact, there likely will be more rounds of legislation, and so to the extent you can reach out, I think that's useful. The last slide is which form should you use. I really think this is likely to change because of some of today's legislation. So I won't spend time on that. I think it would be better to let us move on so that you have time to ask your questions. So I'll stop there with this presentation.
Awesome. Thank you, Tracy. We appreciate your knowledge. We're going to move on to some Q&A. Before we do that, I have a couple quick announcements. But if you do have a question on what's been presented so far today, please go ahead and type it into the question box on your viewing panel, and we will get to as many questions as we can. We've got over 200 people with us today, so we are not going to be able to get to every single question. I also want to point out that you can download the PowerPoint from today from the Resources tab on your viewing panel. We have had problems with that in the past, so if you can't do it, we will also be sending out the slides as well as a recording of today's webinar within the next few days so that you can reference it and you can also share it with other business owners that may need it. Joining us today for our Q&A panel, we have Tracy Ward, who just presented to answer questions on the PPP forgiveness process, and we have Andrew, I'm just going to give your last name a shot, Gachowski, who is the grants coordinator with Congresswoman Schakowsky's office to answer federal relief questions.
Absolutely.
So our first question here, there's going to be a lot of questions about this new round of PPP, so let's just get a couple of those out of the way right from the beginning. The first one is, how soon can we expect to start new applications for the new round of PPP funding?
Tracy, what's your thoughts? Yeah, go ahead.
So I would expect, it appears that there are changes to the program for the reopening PPP and for allowing second loans. So my expectation is that SBA will review the legislation and issue new guidance, and then lenders will review the legislation and the guidance. So I will be surprised if the ability to apply for a PPP loan is, if that happens before the first week of January. But I know everyone's really anxious and geared up for this, so it may be quicker than that. But I would, obviously we'll keep our website up to date on where we are in the process, and I'm sure other lenders will be as well. But I think it will take some time for that new guidance to be written and to come out.
Yeah, to build on that, I think that there's going to be a little bit of a lag time here to getting these things implemented where you can all sign up. But I also would encourage you, if you haven't subscribed to the Congresswoman's newsletter, once these dates are set in stone and we know when we can give you all the green light, we will make a point of pushing that out. I also have a small business, not a regular newsletter, but I've been pushing out SBA guidance on PPP and EIDL and other things that I can connect the organizers of this call with, and I can have you added to that list as well, so that as soon as we know any concrete information, we'll push that out so you have access to it.
Great. Also in the new round, just to clarify, businesses that received PPP funding in the first round can apply again. Is that correct?
That's my understanding. Although again, I think that the eligible entity definition may be somewhat modified because they want to focus on smaller businesses. But yes, it opens up the possibility of applying for a second round of PPP funding, provided that you're eligible under the new sort of context. Great.
Do you know if nonprofits or chambers of commerce will be included in the second round?
So the most recent that I heard was that they did include increased eligibility for nonprofits and 501c6s, which would handle most of the chambers. I haven't seen that in the language today, but that was in the summary of the things that were included as of like midday Saturday. So I will verify, and that will all be in the things that we send out as well. Unless, Tracy, you've heard anything different. That was my understanding.
No, you probably have more up-to-date understanding than I do.
All right, let's pivot here to a couple of questions on the forgiveness process. Tracy, what if I needed to downsize my staff due to state restrictions on my business? Will that reduction in staff count against my forgiveness?
No. Congress passed legislation in June that added a provision that if you have to cut staff because you're complying with COVID restrictions, whether those are CDC or federal, state, or local restrictions or guidance, then that won't count against you in forgiveness. You do need to keep documentation of the guidance that you're complying with and that it has impacted your business, but then you don't have to worry about that reducing your forgiveness.
Great, I appreciate that. Is there any word on how receiving an economic injury disaster loan or any other SBA loan will impact the forgiveness process?
I think that Tracy touched on this a little bit,
go
right?
ahead.
No, go ahead. I was just going to point it towards you because I think that you briefly touched on this in your presentation.
Right? Yes, under prior law up until yesterday, if you had an idle advance and a PPP loan, your PPP forgiveness was reduced by the amount of the advance, which ultimately meant you paid that grant back. It appears that that is going to be corrected in today's legislation. So going forward, these programs are complementary. PPP helps you with payroll and a few other fixed costs. The idle loan program and idle advances can be used for other business needs right now. So they really are complementary and are tools that you should be able to use both of these programs to get through this. And I think today's legislation is going to fix that so that they don't impact each other. You could access these programs, both of them, not just one.
All right, thank you, Tracy. For Andrew, based on the experience with the last direct payment checks, when can we expect the first direct payment stimulus checks to start going out from this legislation?
So it's a little bit of an open question. Secretary Mnuchin claimed that people might start seeing these checks as soon as next week, which I don't know how realistic that is, but what it will come down to is, for many people, whether they're using the list that they started with at the beginning of the first direct payments or if they're going on the list that they ended up with, because there were a lot of folks that were not on the list the first time around that congressional offices like ours had to contact the IRS and say, could you look into this case? This person should have gotten the check. And if they're now on the list and that's all up to date, then it could be that most people will get their checks quite quickly. But if they're going based on the original list, then it's going to be a whole bunch of problems. So I haven't gotten any word on how they're going to do that. I think that may be an administrative call. But again, Secretary Mnuchin said as early as next week.
Great. Let's hope for as fast as possible then. Can either of you clarify what the Congresswoman mentioned before about the PPP loan money being tax deductible? Maybe Tracy, you want to take this one?
Sure. One of the issues when Congress passed the CARES Act, Congress appears to have intended that it not have tax consequences for PPP borrowers, and they made clear in the legislation that it would not count as income to your business, so you wouldn't have to include it when you were paying, count it as income for tax purposes. Separately, and after the CARES Act was passed, the IRS reviewed the tax implications and issued a ruling that if you used PPP funds to pay expenses, so you use them to pay your payroll, then you would not be able to deduct those expenses for tax purposes, assuming you expect to be forgiven. That would have resulted in borrowers having significant tax liability. If you can't deduct all of your expenses, you have a higher net profit, you have a much higher tax bill. It does look like that Congress addressed this, and we are hopeful that that is part of this final legislation that gets passed today so that businesses can go ahead and deduct that payroll cost as they normally would and not be hit with this huge tax bill right now.
Yep. Thanks, Tracy. Andrew, for you, this new legislation, are you aware of any other programs that exist in it besides PPP, like more funding for the Economic Injury Disaster Loan or the EIDL advanced loans or rental assistance?
So, yeah. So there is more funding for EIDL loans. And then a few of the fact sheets that we've gotten have talked about a carve-out specifically in terms of, and the Congressman kind of alluded to this, it's like a EIDL advances for particularly burdened businesses. I haven't seen the details on who would qualify, like what exactly would have to happen, and that's something that we'll have to put out in later guidance. But there is more funding for EIDL in addition to PPP. There is supposedly this new subset of EIDL. They call them grants, which is a little bit unclear to me, but they did that the first time around too. I feel like they were referring to EIDL cash advances as grants when it turned out that they were just cash advances. So I want to see that language before I tell you all that it's a grant. But I do think that there's a few different vehicles for resources here. We'll just have to see what it all looks like at the end of the day today when I think we'll have the language.
Great. That's a great answer. Tracy, are the new PPP loan applications going to be based on 2019 or 2020 payroll?
It's really not clear. We will have to wait until the legislation passes, and then SBA will issue guidance on what lenders need to review and what borrowers need to submit to apply. So right now, I really just don't know.
Okay. And then just our last sort of broader view question for you, Tracy. How can business owners go about finding a bank that offers PPP, and what should they be looking for with a lending institution?
So I would, if you got a PPP loan in the first round, or you have a PPP loan, would check back with your existing PPP lender. That's probably going to be your easiest course. They already know you have that loan with you and have your documentation. You can, SBA, during the first round of PPP, they did ultimately release a list of PPP lenders, especially some of the online lenders, which sometimes are an easier process, especially in rural communities if you don't have a local lender, nearby. We certainly will be updating Self-Help's website once the rules are out and we understand, what we need to change about the program in order to offer it. We were very focused on nonprofits and small businesses led by people of color and communities that were really underserved by other lenders during the first round. And so I expect that is where Self-Help's focus will be again for this round. But we'll definitely, as soon as we have been able to review the rules, we'll update our website to reflect how we're going to roll it out as well.
All right, thank you, Tracy, and thank you to Andrew as well. We'll cut it off there just to make sure that we end on time. I know there were unanswered questions. If you have unanswered questions, please visit ABIC at abic.us. And if you go to the Contact Us tab on our website, you'll be able to send us an email, and we will get back to you as soon as possible. I did see a lot of questions about the Business Interruption Grant Program from the state of Illinois. I did not include those questions for our Q&A because we didn't have a representative from the state of Illinois, but we have been doing technical assistance work with that grant program. So please, if you have BIG questions, please get in contact with ABIC and we'll do our best to help you out. If you have PPP questions or questions on any Cook County programs, please let us know and we'll do everything we can to help you out. I hope you found this webinar useful and helpful to you. When PPP applications open back up, again, please contact us through our website, and we'll be happy to help walk you through the process as we did in the last round. And I just can't stress this enough. Please do not hesitate to reach out to us or anybody else that presented today. We're all here to help, and we're all happy to do so. I will be sending out these slides and a recording of this webinar to everybody, as I mentioned earlier. So please just stay tuned for that. Please feel free to share the recording and share the slides with anybody that you think will find the information useful. But with that, I'll just say thank you very much to everybody for joining us, and we'll see you for our next one.
Thank you.
Thanks a lot.
Thank you.